Good morning. We're here to study ASY and we'll start by technical analysis. This is the all history chart going back to the company's IPO in 1993, which was around $10. It is at 6.36 today. But the long-term trend is bullish since since mid 2004. You can see here the breakout above the 200 days moving average, and it is breaking out to a new high since 98. So the long-term trend is bullish. Also the short-term trend, you can see here a spike in volume, but still this is a very low volume stock with just let me check here just a second, with just 31,000 shares. 31,000 shares traded on yesterday. So but the chart is bullish. You can see the stock reacting here to the 200 days moving average and now moving up. Fundamental analysis. This is the, let me see, just put this a bit higher. This is the number of shares outstanding over the years and the market cap, and the share count compound annual growth rate is 4.1%, and the current market cap is $21 million. This is with a base year of 97. Market cap has been growing just 1.6% a year. With this share count increase, of course the price is lower. The stock price is lower now than what it was in 97, when the stock was when the company had an 18 million market cap. Let's move on. Let's see, put this a bit better. This is a balance sheet study, the long-term debt and the current ratio. Long-term debt now is about $4 million and the current ratio is 1.91. I like to see it above 2. So there was a deterioration in the balance sheet recently, here in the first few quarters of 2007, and cash and marketable securities represent just 2.67% of total current assets. And I really don't like this situation. The company almost has no cash, and receivables are 33.8% of total current assets, and this is not prepaid expenses, sorry, this is inventories, is 56.7%, and inventories are growing 11% for the past 3 years, 11% a year, of course. So I don't like this balance sheet. It looks pretty weak to me, and I'm worried about dilution going forward. As for revenues, well, they declined a lot here in 99, 2000 and 2001, but now they're growing again, and I expect 21.5 million for 2007, still below the 98 levels. They were 14.7 million in fiscal 2006. Gross margin has remained more or less stable here, around 30%, so I expect 31% going forward. Price to sales ratio for our company is 0.97, and for its industry average it is 0.56. So not trading at discount here. Let's move on for earnings per share and net profit margin. Okay, here the company had these huge losses here in earnings per share terms. Look at this, they lost $1.59 per share in 99. Here in 06 we had 49 cents of profit, but that was due to a tax benefit. So the 32 cents I'm expecting for 2007 will be the best ever for the company, with a net profit margin of 5.12%, which has been the net profit margin for the past 2 quarters. So earnings per share are growing 41% since this low base of just 8 cents in 2003. Net profit margin going forward, I expect 5.1%. This could expand, but we cannot extrapolate that from the current fundamental trends. And the price to earnings ratio for ASY is 19.9, and for its industry average it is 15. So I made my valuation model, and the initial share price is the current market price 6.36, the initial share count 3.28 million shares. I put here the dilution factor of 1.04, but it could be more because I'm worried about the balance sheet. This has been the historical average, as we've seen, which leads me to a final share count of 3.7 million. Initial revenue 14.7 million, which was fiscal 2006 revenue. Revenue compound annual growth rate going forward, I put here 1.3, which means 30%, which can be a bit higher than reality. But since revenues are growing 46% in the first 3 quarters of the year compared to the previous 3 quarters, well, I guess 1.3 seems reasonable, which gives me a final revenue of 32 million. Initial net profit margin 5.1%. I believe this could expand to 6%, but it could expand more, but it's hard to know really. Final net income estimate 1.9 million. Earnings per share estimate 52 cents. Earnings per share multiple estimate, it is, I put here 15, which is the industry average, and this gives me a final estimated share price in 2009 of $7.86, and the share price compound annual growth rate expected of 7.3%. So this stock is not attractive, since I look for at least 16%. It is about market average, which is 8%. I look for at least double the market average. So, well, not bad, but not good enough for me, so not attractive. The ASY's rating is 6. Thank you, bye. On a 1 to 10 scale.